you're still not using this to buy more, to lighten up?
I mean, we bought some stuff earlier in the week. We bought, for this, my child trust was talking about for the investment club, we bought some Chevron because the yield got to where we wanted it to be. We are adamant that you should buy Nucor, the largest steel company, that the release that they put out was not negative. It was interpreted as negative, and that was a great opportunity. It was down 13. But we have a Santa Claus rally, and that's terrific. But I would lighten up on, and by the way, the research indicates the same. If you get my bulletin in the morning, which I hope you do if you're a member of the club, over and over again, anything that has got no earnings, the analysts are downgraded. And so that's in sync. You're fighting the analysts. And I find that after a while, it's exhausting to fight the analysts. Now, some of the calls are a little late. You've got some people who are
DocuSign?
Downgrading DocuSign.
MS goes to equal rate.
That was, that was not. Last guy in. The downgrade pool often is wrong.
Hood, B of A initiates underperform.
Hood there. Walgreens hold this up, but they have earnings. But Hood is very interesting here because I was going over with Ben Stoto, who runs research for Mad Money, and Jeff Marks, who's the chief portfolio manager for my trust. And we were saying that it's late to downgrade Hood. We can't find a reason necessarily to buy it, but that is often when everyone has to sell on something. They do have 1/3 of the cohort of millennials. I mean, if the millennials just would stop trading options in Dogecoin and instead would own high-quality companies, they'd do better. But look at that chart. I mean, now obviously Robinhood is. We are doing some SPAC. We have a SPAC piece tonight. There's been so much awful merchandise that's been offered that people are losing a huge amount of money. Let's not forget that either. In the confines of so many stocks being good, there's a lot of people who own Robinhood stock.
Yep.
I don't know. Hey, look, Valero's moving America. That was a joke. Valero more than Bolero. Valero's up $1 from where it was. But I just think that we have to be very careful. If you lose the cloud stocks, if you lose all the companies that are losing money but have great 40% revenue growth, which is consistent, that's not enough anymore. And I'm worried about retail. I'm worried about retail because of Omicron. Because I think that Omicron is sweeping the nation. Now, people say, oh, Jim, it's only New York.
From a foot traffic point of view?
I just think that maybe you want to take a little break. Now, Mark Mahaney, whose work I love so much,
yes.
His proprietary survey says that Amazon's more negative. I don't know. I mean, if Amazon's not that good and the mall's not that good, I mean, we got to pull back a little.
I don't know. I mean, Evercore does take Shopify to outperform this morning.
Well, it's down 20%. A lot of times people say when a great stock is down 20%, you should buy it. And Shopify is great. I think Shopify and Etsy are the two that don't have supply chain problems. You can buy anything you want. They're both terrific stocks for holiday. I really like Shopify. I really like Etsy. But when I see a stock like Adobe down 60, I say, well, okay, let's be a little circumspect. Adobe's a great company.
Yeah.